Mess with the fire, now it's closing in. Nothing Thank you for coming on into the live and sharing your essence with me in this eternal moment, of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same. Let's not waste a second more of your time as we go into the charts. Bada bing, bada boom. Here we go. Into the charts we go. So it looks like last daily candle had a huge buyback wick from within underneath this 0.5 diagonal fib level on this upwards mean reversion path. So this upwards path of the 0.5 does tell you that you are above you're at the equilibrium of that path, and you get below into the discount region and got bought back, which is a bullish sign on the daily if you just go off of this time frame alone. Now, how do you measure a bullish candle here? So let's go to our candlestick patterns and just go over how we can objectively measure that. So you have a where is this? The buyback candle. So you call them hammers, or you could call them, if you have a bullish hammer, technically this could be a hammer. There's one way. It says here spinning top is neutral, but it's not necessarily a spinning top because the rejection wick doesn't have the spinning point of the top. It's kind of almost a hammer entirely, even though it's red. So how do you measure this, whether this is a hammer or not? Well, let me give you a little tip on that real quick. So you take a fib retracement tool and you just go from wick to wick in the direction it got bought back up. So from this case, it's to the upside, and then we go to the basic here. And if the body of this falls anywhere from the wick to wick above the 382, then that is objectively bullish. And conversely, if you're looking for a shooting star type one, like back here, for example, you could have done the same thing. You go from wick to wick, and even though that was a small body, it was not neutral because it fell beneath the 382. So that did imply downside. So is this implying upside? In this one daily candle, it could be alluding to that case. We did get our target into the liquidity. More than half of that was gobbled up. Let's just go and leave that there. So more than half of this is now gone. The only remaining amount left is down here in that time frame. So, well, let's go into the liquidity, shall we? What is the liquidity? What is the heat map from High Block? Well, it's when people leave their liquidity in the charts to be burnt to a crisp by the market maker for not using a stop loss. So let's see who got burnt to a crisp the other day. So we've just been going sideways all weekend, so nothing really here to note. The one thing that is noteworthy is that some long stepped into the equation as we burst out here slightly, and then they came back for that 100x pool, as they like to do. $138 million gone, and you have another 138 million at 50x and 25x down here, which is imbalanced to the 68 million that has entered from the shorts. So the shorts are getting stacked up quite nicely up above here. We already went over those levels. We can go over it again. There's some at 27.22, some at 27.606, and most notably at 27.8, where this band gets very thick, filled with liquidity from these pools. Even the 50x 169 million at 27.75, and another thick band up here at 28.52. So if they go take out the range high of this drop down here, there's a large pool waiting for them, which will get lost to Father Time eventually, as we are seeing all of this get lost. This is a 1 minute time frame, a 1 minute chart, which has 6 days of data. So as these bubbles get lost to time, you're seeing all of the bubbles that were up here previously, which are still open, go missing. So as you see here, there is this 28.52 region, which we've marked off in the charts. We marked it off before and they came back to it. So eventually they do come back to that region. So after spawning the divergence that we've seen on the higher time frames, there could be a narrative shift to start to go eat back into some of this short liquidity. Let's go look at the higher time frame as we expand our vision. It is a Sunday morning here in Japan. I have to teach a English lesson at my house to a CEO of, or not CEO, a board of directors member for a car company. So I have to be going sooner than later. This will be just a short update since I passed out last night and was unable to do so. So I'm trying to do this to and then also say what's up to the fam before I go teach. So this is just, it is low liquidity weekend. I don't expect a huge move today necessarily. We might make our way up into some pools here and there, but you should be enjoying time with the family anyway. The 7-day, pardon me, the 7-day has spawned, it has taken whatever it was going to take, and the imbalances to the upside in that pool we just mentioned. If we go to the 1 month, let's see how y'all are doing. Oh, what's up, Emery? I like your pot shots at our the guru guy. Let's just call him. It's very true. So anyway, the 1 month time frame does have about they ate into a huge amount of liquidity here. Why did they stop here of all these places to stop? Well, we saw this $50 billion that got reclaimed. So here they bounced off of about $70 billion here, and that provided them the divergence and that buyback wick we just went over. And this is where we still see $150 billion on the table down here at 25.2. So this coincides with that 1382 region of this fib level. So could we come down and stab this in such a manner where we come back and eat some of the liquidity and then come back down here? It could be a possibility. It falls in line with the trend lines that people would be drawing on their charts. And yeah, that could be a possibility on this higher time frame of the 3 month. So whatever bounce we do get, you could be looking at yourself a attack to continue on the long liquidity on that time frame. The 6 month also implies that there is some sort of narrative to that downside. You got 82 billion at 22.5 and 68 billion at 25.2. And then it starts to taper, and by taper it just goes to 48 billion at 24.9, 46 at 24.6, 54 at 24.3, and so on and so forth, leading you to the 100 billion target at 22.5. So this entire region is caked up nicely for that narrative to continue to the downside. We did make a lower low on this grander structure narrative, internally speaking, but this was 41 days of longs that needed to be purged, as we've been going over in the last few weeks. Similar to here, they went down and purged the longs in order to go back up. So in order to go back up, they have to purge the longs that are sitting happy campers in their trades. So how far down do they go? In this case, the 22.5 region seems to be the thickest area in this local region. Let's go to the yearly and then go into the charts with our oscillators. Shout out to everyone. All right, so the yearly time frame is where it starts to get interesting, because you start to see these $100 billion pools up at 33.2, 32.8, and 32.4. So you got $300 billion just chilling up here with marionette strings trying to pull the price back up. And you got the longs down here with a few hundred. But if I look, yeah, you got the 2200 got 200 or 300 down here. 24.8 has 100. 25.2 has 83. So you have like 400 billion down here, and you have 400, 500 plus billion up here. So at some stage the narrative will shift, in my humble opinion, based on the narrative that's being created to the upside by all this short liquidity. If we go back to here, in March there was not nearly as much liquidity on this yearly time frame. Now there is starting to get thicker in the 100 billions, triple digits, for that narrative to continue to the upside. So if we spawn enough divergence and the imbalance is cleared on this time frame, then the narrative structure could shift, despite having liquidity below more. It seems very strange. It seems very strange to have, you know, $82 billion there that they leave. But I've seen it. I have literally seen it. And as we went over it on the live, I saw the 64 billion that they just left there only to come back to later. And I've seen, where was it? It was it a 6-month time frame or a yearly time frame? Yeah, it was a yearly. I saw this one where they had 162 billion and they just left it there only to come back, you know, from February 21st to February or March 14th. It was almost a month later that they came back to that, but they did come back to it. So if they do leave stuff there, the idea of coming back to it does still remain, just a matter of when. So do they have to clear it right now just because it's a hop, skip, and a jump away? Not always. So even though this looks beautiful to come down and stab, are they going to do that? You always got to leave yourself open to any possibility. Let's look at the monthly. Looks like they're making an attack on the bubbles we talked about. Let's go turn this guy on. Not yet. All right, so let's go into the chart, shall we? We're gonna just go into the Binance chart where we got all our fibs and stuff. If it will load. Is this it? No, that was not it. It was this one. There we go. Let's just do this with our oscillators on because my time is limited at the moment. Heads up display is on. Oh, by the way, please consider subscribing and hitting that like button if you have not already. It may or may not help out the channel depending on the algorithm's mood. So it helps me out either way, just to let me know you care. All right, so and let's go here. So we have this same buyback wick because it's a different chart but the same asset. The curve on the Momentum Master. What is Momentum Master? Link in the description. Go, scroll down to features, read about each feature. Here's the features. Go down to trend cloud, read about the trend cloud because that's what I'm about to talk about. This trend cloud is starting to curve now in such a manner where it's getting purplish. What does that mean? Well, that means the volume is flowing out of the asset and it's a wake being created behind the boat, which is hard to turn. And so seeing this turn could occur, and it has happened before, where you have these minor purples before you go back up, similar to here in March. But something also, these jitters could turn into massive dumps as well. So is this jitter in the cloud just temporary? Can it be staved off in a short-term manner? As of this moment, you are beneath the baseline, so until you can reclaim the baselines and start to shift them, this narrative structure is to the downside. Even though the daily time frame stochastic is oversold and the Williams has gotten low. The weekly candle close starts tomorrow. So how does this weekly candle close? Does it close red, causing this to get an alarm and causing this to give back some of its stochastic? If it closes red, that could trigger some algorithms to start to go trigger back down into this zone. Now, if we come back and reclaim this 786, the previous idea of bouncing up to these fair value gaps is possible. But if we remain in this bearish candle state, this could trigger the algos to keep going lower on the weekly time frame. Let's go to the 5-day, which I believe it has 2 days left to close. So you have 2 days left for this. We did have the previous cross down event we warned you about back here, and now we're having the alarm with the open mouth platypus thing, and this is coming down on you with the money flow coming up above the RSI. So this could come down some more within those 2 days before the candle closes. If we go to the 3-day, which closed yesterday, I believe, yes it did. So we had that red candle give back a lot of the stochastic, and the momentum on the Williams is still coming down. So this could still come down some more to the 50 region within the next 2 days of that 5-day candle close. They don't coincide with the weekly, so this would be a day after the weekly, after false move Monday. So knowing when your candles close and where it falls during the day of the week, these things could be helpful. And so you got these baselines beneath the price on the daily, which is not yet in a good state. Let's go to the 22-hour. Our treasure 22, the unsyncopated rhythm of that suggests that you will see some sort of 22-hour bounce based off of us reclaiming these baselines and getting in this crossover-like state. Why does that mean? What does a crossover-like state mean? Well, it means they come beneath the price action like such, and you can go there to the baselines and read about those on the website as well. The baselines do imply if the price it gets scooped up like a ice cream scoop and holds beneath that baseline, that's your first sign of reversal. Okay, so you had the same thing occur here. It's scooped up on the other side of the equation. I mean, you could flip it around, it doesn't really matter. You have it scoop up and cross, and then boom, we were gone to the downside. So is the same thing occurring here. It's happened before and it will happen again. It's mighty possible with this buyback wick implying upside action occurring, at least to the region of this weighted moving average and adaptive moving average. So we could come back to this region, although there's not really any pools to note. So I'm going to leave a little thing there so I can extend this. At the 27,375 region, and this is where we juxtapose with the liquidity. 27,375, 27,375. 27,375 puts you at the outskirts of this thing here, this little band here at 27,322. It's this entire band of noodles just above us. You could keep going at that point. It depends on how many of these bubble characters like to hop in and cut the queue. So yeah, that does line up nicely with the liquidity pools. And then we had the pools up above as well. So do we make our way up to here before we come down, or do we stay here? That is the question. All right, so yeah, that is the 22-hour. You do have the clouds starting to come down on you now in a open fashion that is very thick. So if we did, let's say, make it up to here, for example, the cloud, by the time the cloud gets there, it'll probably be to here. So it'll probably be at this stage, like so. You know, it would be like that or something. And then you'd basically see the other side of the cloud like that, and you get some sort of rejection, and then whatever happens there, like, do you reclaim it and go higher? Do you come all the way back down into here? Something like that. So the 22-hour is good to go, and you got the money flow extremely below the RSI. So this is extremely bullish in my opinion, and you could see this crossover event, and you get that nice angle every time where this double bottom effect on the Williams into the green, and you're out of here for the 22-hour time frame. I would not be shorting this zone with this time frame in this state, because it will bang you in the face. Not financial advice, but I have seen it happen. So this is when somebody was trying to short support with the 22 not on their side, and it banged in their face. So just a forewarning about that. The 12-hour time frame also scooping up nicely beneath the price here on the fat boy and the thin boy baseline. So if it can close this 12-hour with this above the baseline, then it could trigger some algos to continue on their path to buying back to the upside. On the 12-hour time frame, you're starting to see this already play out. And will you get the rising sun event with the money flow beneath the RSI? Is it going to come up here? Looks like it could. So you got these higher time frame supports in mind. They're trying once again previously we had that crossover event back here, right? And then yeah, we failed out of it. So is that possibility of always failing out of it. The 6 hour time frame is overbought here, doing its damnedest to just maintain a level. So the 6 hour time frame and the 4 hour are not on your side. How do I know the 4 hour is not on my side without looking? Well, there's this little thing here that tells me the stochastic without having to look. So yeah, if we go to the 4 hour, the 4 and the 6 are against you. Then this is where the narrative starts to not be so bullish, because you see these getting overbought here. Although they do get pinned when it's time to play ball, and you are seeing bullish divergence on the money flow and the RSI. This is what these green lines with these crystals represent. We have automatic divergence calculators which look back within the it's a very accurate and sensitive formula that doesn't give you pipe dreams of drawing lines all the way back to here. It keeps the formula very tight and accurate. So we are seeing some bullish divergence here on the RSI and the money flow on the 4 hour time frame. The 4 hour time frame could suggest that this goes up into these regions. The cloud is still very thick, so as of this moment it looks like you're getting a rejection point possibility happening here. The only place that you would see if it goes above that, and then you bounce off of that region and you're gone. So either you look to see this type of reclamation, or it's going to pierce the cloud and fail at this ATR, this average true range level, this super trend level, and come back down. Either way, it looks like the structure on the higher time frames, the 12 and the 22 and the daily, are calling for possible suppression of the 4 and the 6 here, due to the bullish divergence that was spawned off of the carcasses of those longs we went over that died.
Fatality.
Yes, divergence is spawned off of the liquidated accounts of the side that was attacked. So this wick is that death of those longs. So we did see the crossover event on the hourly, and this would have led you to the promised land had you been able to withstand this buyback wick and see that it was holding the entire time. And this type of holding of the baselines keeps you in the trade, potentially speaking. And you had this cross down event which got negated here, and you're starting to see this trend shift on the hourly time frame here. Okay, so are we coming back up into these pools? It looks like we might be doing that on the weekend to eat up some of this short liquidity that is refusing to pay itself. The curvature of this cloud doesn't express a huge intent here, so it could curve out and just come back down out of here. Based off of that, you could just come back down and kiss the cloud here too. So looking at how the different time frames clouds look too also suggests that you could just trend sideways for the rest of the weekend and try to reset some time frames and get some liquidity. Coming back down to here would be 26,630. At 26,630 is this guy, this 138 million 50x person, so they could just come back for them too and just let this pool build as they have thus far. So it could get rejected here on the hourly, and you got 1, 2, 3 hits to the high, and you start to come down into this zone based off of how this curvature is looking at this moment. The hourly time frame is still acting ambiguous, so there's not really anything bullish here to note, and that's where I shift my thing to say this is what might occur in the immediate time frame, because as we get more into the minutia, the immediate starts to occur. Now we're going to the 15 minute, also ambiguous as it oscillates between its consolidation path, and we had 1, 2, and is this a third hit up to this region before we come back down into here. The liquidity that opened up back here could suggest some sort of retrace to knock out the 50x. If they were going to go higher, they would want to take this character out first, also coincides with this 265700X pool. So are they going to come back and grab those guys before they come out of here for the interim? So we will update you around this time tonight, so we'll try to be back on around here and see where we lead, but it looks like we're going sideways for the most part until this evening leading into the weekly candle close. But we already have the narrative structure for where it might go to close out the candle, so as of this 12-hour period it'll probably just go sideways within this consolidated range. All right, and that's about it. I don't have much more time to go over anything else. I just wanted to keep it short but sweet, and I'll be back with you in about 12 hours. So we'll catch up with you on the 12-hour update from now, which would put me right around in this region. So we'll just see if we just went sideways and reset some of the oscillators. All right, folks, I appreciate your time, and I don't want to waste a second more of it. So thank you for coming on into live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, and I'll do the same, bringing the fire, the precision, the accuracy, and all that fun stuff.